New worries today on Wall Street as the Dow Jones Industrial Average nosedives more than 1,000 points moments after the opening bell. Good afternoon. Brad is off. A wild start to the trading week on Wall Street today. Things did rebound after that rocky start, but the Dow still ended the day losing nearly 600 points. China set the stage again today for a global sell-off as Chinese shares fell by 8.5%. So we didn't do as bad. But joining us here to put today's activity into perspective, money manager Jim Russell from Ball & Gainer Investment Counsel. You were here Friday. You told us we were in for some choppiness, but you also said the economy is fundamentally sound. Do you still feel that way?
Paula, we do. Things don't change from a Friday to a Monday in terms of the U.S. economy. Low inflation, low interest rates, unemployment at 5.3%. A lot of good things going on for you and I, as well as businesses in general. The crisis that you're talking about, probably crisis is too strong a word, is emanating from China. This is an imported problem. Weakness, global weakness is the concern. Will it splash upon the shores of the U.S.? We don't think so in a dramatic fashion, but it could perhaps provide a little bit of a pause.
Well, at one point today, it almost looked like we were going to go positive because some of the shares that had been really battered, people were starting to go in and buy. They came up. We were almost going to be in positive territory. Do we put any stake in that people are seeing some buying opportunities, and is that what we should be taking away from this?
Well, a global slowdown usually doesn't get corrected in 2, 3, 4 days. So we do think that this plays out for a period longer than this. Higher volatility, maybe lower stock prices. What normally happens, Paula, stocks go down dramatically, they go down a couple more times, and then they'll finish a day flat. There'll be a rally into the next few days, and then it'll go down again. So we're watching to see if that pattern repeats. Normally, in history, there have been 28 times that the market's gone down 5% for a week, which is what we had last week. The week afterwards, the average increase, that's this week, is 0.5%. 4 weeks after that, 1 month after that, the average increase is 1.6%. 3 months after that, the average increase is 5%.
Oh,
we'll see if this time's average as well.
And just real quickly, you know, in October of '87, when we had a true crash down more than 20%, the next day stocks were up. So if you had sold everything, you were really hurt. Okay, should we be looking at those buying opportunities? Kroger, for instance, really hit today.
On the open, it was down 20%. At Ball & Gainer, we think Kroger is a wonderful growth story. They're doing everything right, executing well, margins are higher. They are the 5th largest retailer on earth. So we think there's a lot of good things going on at Kroger. We like that story a lot. That's the type of irrational behavior that normally happens during a little bit of a market panic, and we are seeing some signs of that.
I don't want to tell everyone to necessarily go out and buy stock because you want to talk to your own investment advisor. But here, and by the way, this is the closing number on the Dow. The 586 down is where it settled. But, you know, I think this really points out the opportunity or the need to have a financial advisor starting young in life when you first get a job, because you have a plan. And if your plan is today to buy quality stocks that are on sale, you talk to that advisor and see if it's right for you.
We think we're reaching that point before too much longer. Again, easing into great quality names. Kroger's one example. There are many others where we feel that price points are coming down to a point where they're becoming attractive. Now, we've really, the bull market that's been in place, and this is the 6th year of that, has compounded at 15% over the last 5 years. We're due for a pause. We're seeing that loud and clear right now. The key is to never invest emotionally, never freak out. Always go in level-headed.
And finally, real briefly, if you're not an investor and you think you don't care, I mean, we're still all connected, but for shoppers, we've got a deflationary environment, so we're going to see maybe food prices come down, consumer goods, gasoline prices.
Absolutely. Inflation is very well controlled. That's what we think, why we think the Fed will not act in September, maybe not even in December, maybe in 2016 to take rates a little higher. Gasoline prices are certain to come down. Oil finished off over 3%. We're likely to see much lower gasoline prices. The corn crop looks like it's going to be the 3rd largest ever. Supply and demand indicates that corn prices will remain low.
All right, some good news there, a little silver lining, and we hope to have you back when you can tell us the Dow went up 5% in a day.
Sounds great.
But thank you, Jim.
Thank you, Paula.